Hey guys, how are you? We got some cards I wanted to show you on financing, and the first keywords in financing has to do with pre-approval. So the first card I have is what is meant by pre-approval. Take a second to try to think about that. Pre and approval. A lot of people are going to be asking for, especially sellers, that they'd like to have people that are pre-approved coming to the property and putting in offers. But pre-approval is the practice by a lender of approving a borrower for a certain loan amount. This allows prospective home buyers to shop with the knowledge likely to be shared with the seller and broker to demonstrate their financial capability, that the loan will be approved. An example is Peter and Pamela Shea are searching for a new home. They want a potential lender who pre-approved them for a $250,000 loan. They submitted a purchase offer at the same time as another family that was not pre-approved. The seller is more likely to accept the Shea's offer because they are pre-approved and the other party is not. It is leverage when you're putting an offer and showing that you have the capability of purchasing. So it's a good thing to do, is to be pre-approved when you go out into the marketplace. Okay. Our next word here, pre-qualify. Take a second and think about that. Again, this has to do with financing. Pre-qualify. Okay. To pre-qualify is to estimate the most expensive home a buyer can afford, based on the buyer's income and available assets. The exercise, often performed by a real estate broker, does not obligate the buyer to buy a specific home or promise specific financing, but merely indicates that the buyer may be able to afford a home in a specific price range. An example is Paul's income is sufficient to pre-qualify for a $250,000 loan. According to the guidelines used for a conventional loan, because Paul can also raise $50,000 as a down payment, he can then look for homes costing up to $300,000. Okay? This is a great thing as a buyer to have pre-qualifications, and also the pre-approval for the seller. Those two keywords. Next is a loan commitment. Okay. By the way, these cards are Barron real estate exam cards by Barron's. Okay, if you would like to know. This is number 407. They have them categorized out. These are under finance. So what is a loan commitment? It's committing to a loan. Loan commitment is an agreement, okay, to lend money, usually of a specified amount. Has specified terms at some time in the future. A lock-in interest rate may also be included. Okay, for example, before commencing development, Abel obtains a loan commitment from a construction lender. He is also required to get a takeout financing commitment for a permanent mortgage. On completion of construction, the permanent mortgage will pay off the construction loan. Okay, basically, it's a tie-in with a lender that will commit funds to your project. Okay, here we go. What is a permanent mortgage? permanent lender. We've heard of mortgage, we've heard of lender. What are permanent mortgage and permanent lender? Okay, a permanent mortgage is a mortgage initially written for a long period of time, more than 10 years. A permanent lender is one who makes such loans, as contrasted with a construction lender, who makes loans to finance the construction of a property. Traditional permanent lenders include credit unions, insurance companies, mortgage bankers, pension funds, REITs, savings and loan associations. For a house to be built, often a permanent mortgage commitment is required before a construction loan can be arranged. A construction loan to finance construction is also called an interim loan. Basically, to me, it's like a regular mortgage. They call it a permanent mortgage, right? Which is also made by a permanent lender. Okay. What is loan origination? You've heard this before. What does it involve? And what are the origination fees? What is a loan origination? What does it involve? And what are the origination fees? This is all under financing. Okay. Loan origination is the process which a loan is funded, including due diligence study, financial structure, and loan commitment approval. All part of that loan origination. Origination fees are charged to a borrower to cover costs of issuing the loan, such as credit check, appraisal, and title expenses. Okay. Basically, everything involved in getting a loan. That's originating a loan origination. Another finance. Do a couple more and then we'll take a break. What is interest? An interest rate. You should be aware of this. Points on money borrowed. Interest is charged for the use of money. The interest rate is the periodic percentage of the sum of money that is charged for its use. When money is borrowed, the lender requires payment of interest at specific interest rate to compensate for risk, deferment, or benefits, inflation, and administrative burden. The interest rate is applied each period to the unpaid balance until the loan is paid off. Interest rate. Everybody's heard of this one. What is the prime rate? What is the prime rate? Try to remember prime rib. It's the main rate we all work off of. This has a nice explanation to it. Prime rate is the lowest commercial interest rate charged by banks. The prime rate is the lowest commercial interest rate charged by banks on short-term loans to their most creditworthy customers. The prime rate is not the same as the long-term mortgage rate, though it may influence long-term rates. Also, it is not the same as the consumer loan rates that is charged on personal property loans and credit cards. Mortgage rates and consumer loan rates are generally higher, sometimes much higher than the prime rate, but exceptions may occur. For example, Bank of America and Wells Fargo offer a prime rate of 7%. Chevron Texaco is a prime customer, and at that rate, they may borrow loans up to 270 days. Bank of America offers construction loans to qualified builders at 4 points above prime rate. So prime rate is, you can look at it as a base rate, and then the banks work off of that. Okay. What is accrued interest? Accrued interest. Accrued. Adding up. That's also interest. This is also finance. Accrued interest is interest that has been earned and not paid. It's adding up. Accrued. Accrued. For example, if 6% interest is earned on a $100 deposit, 6% of interest is accrued to the depositor. Accrued interest, okay, is typically something that you would have money in the bank, you make, or investment, you're making money on that investment, and it's money earned, okay, accrued. Good stuff, we're making progress here. What are points or discount points? Points on your loan, 2 points, 1 point, no points. Discount points, points. You hear that a lot. Points or discount points are amounts paid to the lender at the time of the origination of the loan or of a loan to account for the difference between the market interest rate and the lower face rate of a note. Each point is equivalent to 1% of the face amount of the loan. The seller of a house often pays the points. The seller of a house often pays the points. But that can also be negotiated, required on a buyer's loan. For example, a loan of $100,000 face value is made at 6% interest plus 2 points. Plus 2, they call them discount points. The lender provides only $98,000 of funds, deducting 2% for the points. The true rate of interest on the loan is about 6.25% because the points are spread over the life of the loan in addition to the 6% interest rate. A buy-down occurs when the party pays cash in advance to reduce the contract's face interest rate. Okay. Here's your points. Discount rate is also a name for it. Okay, we're gonna wrap this, and we'll get on to a next session. Let me know if you like these flashcards, the way I'm doing this. Okay. In regards to going over what we discussed, we talked about pre-approval. We talked about pre-qualify. We talked about loan commitment. We talked about permanent mortgage, permanent lender, which is long-term. We talked about loan origination fees. We talked about interest and interest rates. We talked about prime rates. And we talked about accrued interest. And we talked about points. Okay? Talked about a lot. Okay, guys. Hey, thanks a lot. And we'll see you soon.